It's a problem that anybody that works for a salary has, which is I generate a cash and the currency is being devalued every year. The real question is, what's the rate at which it's devalued? Well, it was about 7% a year, and now it's like 20% a year, and it's 15 to 20% a year. You got to figure out, is it 15, 20, or 25? If it's 15 to 20, the currency is weakening 1 to 2% a month. When it gets to be 40 to 50, it's collapsing. That's Argentina or worse. So
welcome to Dream Richer. Why do you think all the banks and Wall Street investors are on high alert right now? According to Mr. Saylor, the answer is simple: an economic collapse. The dollar has been losing its value every year, but nothing close to what we are seeing now. We are living in a world of inflation. Inflation that has accelerated in the United States over the past year or two is present beyond US borders. To no surprise, USA is not the only one undergoing this strange situation. Countries like India, Argentina, Russia are also going through a similar situation. For example, the Indian government is releasing grain stocks into the economy, so India has a food surplus. The government keeps stocks, and it's trying to boost the food supply in an effort to lower prices. While the US Federal Reserve's inflation target is 2%, in India, it's around 4 to 6%. The Biden administration has been doing the same thing with crude oil here in the US by releasing oil from government stockpiles in an effort to bring down gas prices. By the end of this video, the billionaire investor Michael Saylor unravels the mystery of our current economic situation. If you find the video helpful, then don't forget to subscribe. Let's get right into it.
if you had a large portfolio of stocks or assets and you went into this pandemic, after the Fed ended up expanding the money supply with the interest rates going to zero and the expansion of the M2 monetary base, the money base, you found that you were actually 25, 30% wealthy or doing nothing. You could have done nothing the entire year. The only mistake you could have made is do something, right? If you had $1 billion and you did nothing for the entire year, you had $1.3 billion at the end of the year. On the other hand, if you had a Main Street company and you're generating $100 million a year in cash flow and you're valued at $1 billion because of the cash flow, you would have to be generating $130 million after a year to be valued the same, because the value, the assets that the money buy, is being devalued by 30%. If the currency is devalued at some rate, and the money supply expanded to 24% last year, so you could use that as your metric, or you could use the S&P 500's return as another metric. Well, there's a different coefficient for the price gradient, or the change in price for everything you might want to buy, and it's different at every point in time. So for example, if I put you in lockdown and I make it illegal to go to the movies and I make it illegal to go to a restaurant, then the price of restaurants and movie theaters aren't going to go up. If I make it illegal, inappropriate to go on a cruise and fly in an airplane, then the price of cruise tickets and movie theater tickets and restaurants, they just don't go up because you can't buy them if you want to. There's no velocity on that money. Okay, what can you buy? You can buy stocks. You can buy crypto, right? What does go up? Well, if I give you $1,000 and you can go and you can buy stocks, then the price of stocks go up. What happens next? Everybody gets locked into their apartment and they decide they really want a house with grass. So what happened next? Well, 12 weeks after the lockdowns, the price of suburban housing went up and people started trying to buy houses. Inflation is varying by time, by space, and it's varying by every item. And if you want to calculate the inflation index, you have to construct a market basket of goods and services and assets that you would want to acquire. And then I can give you the rate at which that market basket of goods and services and assets is changing every month or every week. That would be different for every person. So what happened after the lockdowns? Well, we got hyperinflation in some things. Bonds hyperinflated. Cost of bonds doubled in 3 weeks. That's hyperinflation. Equities inflated. They were up 40%, year over year. Crypto's inflated. Bitcoin was up 400%.
Inflation in an economy, when contained and limited, can be classified as a good thing. This is especially good news for investors who own tangible assets, such as real estate, inventory, vehicles, and land. The good news for investors is that returns for most real assets are resilient. Why? Well, because of their inherent ability to absorb inflation through rental income. There are 4 key factors that set real assets apart in their ability to combat inflation. Number 1, higher demand. A sharp rise in inflation rates has historically been associated with an increase in economic output. This is broadly positive for all asset classes, but particularly real assets. Number 2. Fixed income increases due to increase in rent. Number 3. Productivity arbitrage. And finally, number 4. Low income volatility.
Cash is trash. Why is cash trash? Well, if the money supply is expanding at 7% a year, then the risk-free hurdle rate is 7%. If you don't generate more than 7% yield on your cash, then it's devaluing. So from 2010 to 2020, the money supply expanded at 7%. All the cash you're holding is losing 7% of its value, assuming you have a 0% interest rate or zero yield on the cash. So you can imagine the traditional world, you invest your cash at 3% treasury yields and you get a -7 and it's like a -4% and divide 4 into 72. And somewhere 15, 20 years out, you're going to lose half of the shareholder value in the treasury. If you do that, people might hold their nose. But after March of 2000, the money supply is expanding at 24%. The interest rate's 0. So now you have to put a forecast in place. At what rate will the money supply expand? If it expands at 20% a year and you're going to generate 0 in treasury yield, then you're looking at cutting your treasury purchasing power in half in 3.5 years.
It's clear from Michael Saylor's explanation that Bitcoin is one of the best investments right now, despite Bitcoin seeing lower price right now. However, the billionaire investor is more bullish on the coin than ever. The whole market, including the Feds and economists, are in a state of confusion as to how inflation can be controlled. With increased consumer demand being the main driver of inflation, experts say there is not much the government can do to fight inflation, but they agree that the Federal Reserve should raise interest rates and to start selling off assets. The goal of that is to make it more expensive to borrow money to buy a house or to buy a car, or for a business to buy plants and equipment, and that will cool off demand in the economy, slow economic growth, and hence slow inflation. What do you think the future looks like? To learn more about the latest crypto news, watch these videos here.